Okay, so last week we had a CPI report that came out. Nothing really earth-shattering there. I think we're up like about 0.5%. But mortgage rates, more importantly, stay pretty steady. In fact, they even came back down a little bit. So if we had quoted a rate, say, last Wednesday, and you quoted a rate today, the rates are actually a little bit lower than they were last week. So it's a good sign. So if we're looking at the MBS charts, the mortgage-backed securities, we're seeing what they call a Fibonacci level that's a level of support that MBS is kind of bouncing off of. So it's a good sign, but we've broken through these levels many times over the last 6 months, so nobody's holding their breath. The 10-year Treasury is also testing some ceilings, so we're watching that. We've got some really important reports coming out this week. Consumer confidence reports coming out, which is currently at an all-time low since like 1982. We've got reports in China and Shanghai where where they had been down on lockdown for a lot longer than we have. Well, they're showing signs that they're going to let their people out and they're going to start consuming more energy, which is going to probably push prices up even higher. And so we may not be out of the woods yet when it comes to the inflation challenge that we're faced with, but we're watching that closely. Right now is a really good time, at least in the next couple of days, to possibly lock in a rate. We talked about in the last report, looking at ARMs and different things like that. Some of the lenders are getting better pricing with that. So, talk to us about that. We can help you guide through those choppy waters. But anyway, watch for the consumer confidence report. The housing market index is coming out for May really soon. We'll get to see that at the end of the month. So let's just keep a watch on that. And you guys have a great week.